first and foremost, JD, we learned that the $32 billion valuation was absolute fiction. And it's a little bit irritating that that number was bandied about for so long, because it had absolutely no relation to the reality that we saw from documents that were released prior to the FTX bankruptcy filing on Friday. The Thursday balance sheet indicated assets of no more than about $9 billion. And a great deal of those were these ephemeral assets that were linked to crypto tokens and digital tokens and all the rest of it in various markets around the world. The most significant was this, JD. The biggest asset on the balance sheet prior to the bankruptcy filing was a $2.2 billion holding in a token called Serum. Now, Serum was invented by FTX itself. The market cap of Serum on that Thursday was $65 billion. FTX was telling us it was worth $2.2 billion. So this is kind of indicative of what we are seeing in the falsehoods that this company was providing to investors, to depositors, and to people transacting on the platform. It was absolutely a tower of piffle in terms of its probity and exactitude. This company, to some degree, didn't exist in any way compared to what we thought it did. And as a result, the collapse was so quick and so spectacular. I was tickled, JD, by the fact that the most attractive asset on the balance sheet for a company that claimed to be at the forefront of cryptocurrency engineering was a $200 million US dollar cash deposit. That's probably what's going to be worth the most of all of it.
That's incredible. Now, Sam Bankman-Fried's own hedge fund, Alameda, that's a name that a lot of people will see in the headlines. We learned it's not only the largest customer of FTX's, but also that Alameda was able to use customer funds. And I wonder, as you watch this story unfold the last 4 to 5 days, do you get the sense this is a drip, drip, drip kind of story, Martin, that's likely to continue unfolding with unsavory detail after unsavory detail for the days and weeks to come?
Unquestionably. I mean, this was meant to be the paramount in the cryptocurrency world. This was the company run by a man whose parents were compliance lawyers, who had the ear of regulators all over the world, particularly here in the United States, and was cozied up to some of the biggest names in politics and entertainment as a result. To put it bluntly, JD, people believed him. So they believed what he was saying about the value of the assets, or in this case, not, that were on the balance sheet. If these turn out to be false, and every indication seems to be that they are, people are going to question the validity of assets held on exchanges all over the world and the assets that are underpinning digital tokens that trade on them. This, I think you're absolutely right, is going to come out on a drip-by-drip basis, because investors, if they are smart, are no longer going to believe the words of the men and women that run these companies. They are going to demand audited results. They are going to demand evidence that there is financial backing for the tokens that are being traded on a day-to-day basis. Now, whether or not this will prove enough evidence to underpin confidence in the market remains to be seen, because, as I mentioned, balance sheets basically put a value on Serum tokens that bore no relation to reality in terms of their market capital. So there will have to be even deeper questions and deeper probing in terms of what we think are the value of these assets versus what they actually are. And the complexity surrounding them is making that even more difficult. So this has shaken confidence in the crypto industry to the absolute core, and I don't think anybody anticipates that this is going to draw a line underneath that.